I don't know no Scaramucci, man. I don't know nobody. The one rule about criminals is, we never just acknowledge, who we know or don't know. I don't know him. Who? Nah, man. I don't know him. Fuck out of here, man. Who that? I ain't supposed to be here. I wish I worked more. Worked so much. I wish I worked 10 times harder. Are you crazy? I've been feeling so lazy lately. Gotta bust my ass. Alright, so this is a 200 million market cap called Science 37. Science 37 Holdings. Is it trading near cash? That'd be sick. I like stocks trading near cash. I like it a lot. Let's see what the details are. Maybe they have debt. You never know with these things. Accounts receivable, prepaids, property and plant. Okay. No assets basically other than the cash. Any debt? Doesn't look like it. A little deferred revenue. Alright, paid in capital, something I pay a lot of attention to. Alright, so it is trading pretty close to cash, not too far. Accumulated deficit 163. Alright. Let's see, they do have revenue. They do. But they do have revenue, Johnny, they do. Baby, I'm in space with you. I just can't crack your code. One day screaming you love me now. The next day. I just can't crack your code. The next day you're so cold. One day you're here, one day you're there. You're so unfair. Spillings in your cup on the door. Holy Grail. SG&A 28,183, 11,382. I'm not going to include depreciation. Loss is growing. Sublease income. I'm not going to include sublease income for crying out loud. Fuck-cocked idea is that? Fuck-cocked, I tell ya. It's fuck-cocked. I like how the company had 116 million. Well, that's not uncommon actually. You have like a big difference between preferred shares and common shares. Pretty typical actually. But it should be like an adjusted all dilution kind of thing. On an as converted basis, I guess. I don't know, whatever. Who cares? Who cares? Agile clinical trials. Oh. I need to get some guitars up in the crib. I haven't played guitar in a minute. Alright, let's see. Just reading this press release. Number go up. That's great, right? I need to get the exact pixel. Got it. Alright, who's David Coman? I need to make a whole new programming language for Excel, because this shit sucks. Key value pairs and everything. No, I know what VBA is. I'm talking about something really robust. I was programming BASIC when I was 6 years old. No, I need something really robust. Not like Airtable, like something serious. I'd rather create a new render engine than export from Excel. I would be uprooting Excel, not the other way around. Alright, so not much detail in here. Did they do a conference call? It doesn't look like they even did a conference call. That's sad. That's sad. Okay, there is revenue guidance at least. Oh, there is a call. Thank God. Why do I have to copy paste this? I think it'd be better to make my own. I'd probably want it to be NoSQL. It's kind of a NoSQL rendering system. It's sort of like in some ontology system like OWL or RDS kind of relevance. Or something like that, I don't know. Kubernetes, I don't know about that. Yeah, Destiny is an idiot. He's a complete idiot. One day screaming you love me now, the next day you're so cold. One day you're here, one day you're there, you're so unfair. Spill it to your cup, run it over, holy grail. You takes the food in my mouth. Ow! Alright, so let's see. So they did 44-1, right? And they're going to do guidance of like 80. That's not good. I think it's like revenue is going to basically be flat. Not even. It's going to like starting to slow down. Bookings are pretty bad number. That's why the stock's been in the toilet. Still, somebody's using their software. Somebody likes this thing. Oh, this was last year. This is Q2 last year bookings. This is not revenue. Oops. Right, okay. got you. Revenue was okay. Guidance is 76 to 86, so we'll call that 81 is the midpoint, right? Okay, so we're still growing. It's not, doesn't look good, I guess, but. Spinning from your cup till I run it over. Holy Grail. Okay. I want to save this slide.
Hello, thank you for standing by and welcome to the Science 37 second quarter 2022 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you'll need to press star 11 on your telephone. Please be advised that today's conference may be recorded. I would now like to hand the conference over to your speaker today, Caroline Paul, Investor Relations. Please go ahead.
Thank you, and thank you all for participating in today's call. Joining me are David Coleman, Chief Executive Officer, and Mike Zaranek, Chief Financial Officer. Earlier today, Science 37 released financial results for the quarter ended June 30th, 2022. A copy of the press release is available on the company's website. Before we begin, I'd like to remind you that management will make statements during this call that include forward-looking statements within the meaning of federal securities laws, which are made pursuant to the safe harbor provisions of the Private Securities Litigation Reform Act of 1995. These forward-looking statements are based upon our current estimates and various assumptions and involve material risks and uncertainties that could cause actual results or events to materially differ from those anticipated or implied by these forward-looking statements. We encourage you to review our filings made within the Securities and Exchange Commission for a discussion of these risk factors, including our quarterly report on Form 10-Q for the quarter ended June 30th, 2022, which was filed earlier today. You are cautioned not to place undue reliance on these forward-looking statements, which we speak only as of today, and the company disclaims any obligation to update such statements for new information. We believe that certain non-GAAP metrics are useful in evaluating our operational performance. We use these non-GAAP measures to evaluate our ongoing operations and for internal planning and forecasting purposes. Information about non-GAAP financial measures referenced, including a reconciliation of those measures to the most comparable GAAP measures, can be found in our SEC filings and the earnings materials available on the Investor Relations portion of our website at investors.science37.com. I would now like to just turn the call over to David Coleman.
Thanks, Caroline. Good morning, everyone, and thank you for joining us. During the second quarter, we made meaningful progress on our strategic priorities, positioning Science 37 for long-term profitability, extending our market leadership position through investments in our operating system, and enhancing our commercial efforts for top-line growth. With intentional focus on our path to profitability, we were able to achieve significant gains quarter over quarter. Second quarter revenues remained strong at $19.3 million, and cost containment enabled us to grow adjusted gross margins sequentially from 17% in the first quarter to more than 30% in the second quarter, while also reducing SG&A, excluding stock-based compensation, by almost 10%. With this level of focus, we remain committed to our plan, as noted in our first quarter earnings call, to continue to drive toward profitability by the end of 2024 with our existing cash on hand. platform's flexibility and the breadth of capability to deliver across all decentralized components such as e-consent, tele, e-source, adverse event tracking, medical record retrieval, concomitant medicine tracking, and telemedicine, all in one platform. This is in addition to unifying the workflow to enable a patient, mobile nurse, remote coordinator, and telemedicine investigator.
Oh, they lowered
to manage
guidance.
care, all from the comfort of the patient's living room, with consistency across each patient and each visit along the protocol. Quantitatively, our sales pipeline activity for new tech-oriented opportunities in the second quarter was 5 times greater than that in the first quarter level. In addition, our new platform release has already generated its first award with a top 20 pharma company that underwent an exhaustive DCT tech RFP, where we displaced a competitor to become its new provider of choice. As we continue to invest in the platform to drive market adoption, we're also investing in automating our market-leading workflow capability to continue to reduce human interaction and subjectivity, which will reduce costs and improve compliance and quality. Beyond the core technology platform, we continue to invest in our patient recruitment capabilities and are excited about the upcoming launch of our new CRM system to streamline the patient enrollment process, which we've coupled with investments in our call center technology to ensure that every patient who expresses interest in participating has a seamless experience from contact to consent in order to efficiently maximize study enrollment. These enhancements will build upon our current patient recruitment success rate, where we're happy to report we're delivering well above our 100% on-time targets across the blended mix of active studies. This, of course, can be juxtaposed with traditional clinical trial timelines, which are reportedly late more than 80% of the time. Our final area of focus, enhancing our commercial efforts, continues to produce both volume and larger deal sizes across large pharma, mid-sized pharma, and biotechs who are looking to save time, to reduce burn, and to accelerate time to commercialization. As of the end of the second quarter, and as we sit here today, our sales pipeline continues to set new highs. In addition to the pipeline growth for our new technology offering, which I talked about a moment ago, our Metasite pipeline is up 70% quarter over quarter, much of which is the result of our Metasite Lite and Metasite Rescue product offerings that we announced in the second quarter. The composition of our pipeline continues to lean toward deals that are greater than $10 million, many of which are from repeat customers, which we believe is testament to the maturation of the DCT market and our ability to effectively enhance speed and productivity for existing customers. For perspective, the dollar volume of $10 million plus opportunities in our pipeline is up nearly 400% year over year, and these larger opportunities now represent almost 50% of our qualified sales pipeline on a dollar basis. While we're excited to see the rapid growth in our sales pipeline, we're also seeing longer sales cycles, particularly on larger studies, which is reflected in our net bookings of $25.4 million for the second quarter. The elongated sales cycles are directly correlated to the size of the opportunities in our pipeline, given the criticality
Nice
of the
excuse.
studies we're supporting and the number of people who are often involved in the decision-making process. While others in the industry are reporting longer decision-making timelines among sponsors, it's unclear how much of that may be impacting us. Regardless, we remain optimistic about our ability to convert our growing pipeline into strong bookings over the long run. With that, I'll now turn the call over to Mike Saranic, our Chief Financial Officer, to provide additional detail regarding our financial performance. of our largest studies, based on our old pricing model, came to conclusion, and we were effectively able to absorb some of the excess capacity we had in the first quarter. In addition to the significant gains in adjusted gross margin, we were able to take significant costs out of the business by shedding our reliance on third-party resources, improving processes, and employing automation to reduce our need for excess hiring. As a result, selling general and administrative expenses, inclusive of $5.7 million of stock-based compensation, were $28.2 million in the second quarter, a decrease from $30.2 million in the first quarter of 2022. Adjusted EBITDA, which we calculate by adding back depreciation, amortization, taxes, interest, transaction expenses, and stock-based compensation, and adjusting for the impact of the change in fair value of the earnout liability, was a loss of $16.5 million in the quarter, representing a 17% sequential improvement from the first quarter loss of $19.8 million. You will note our GAAP net loss of $5.8 million reflects a gain of $20.9 million related to the change in fair value of the earnout liability, which was part of the original transaction. As a reminder, upon the stock price meeting certain thresholds within a 36-month period of the transaction closing, the equity holders of the former Science 37 entity would receive additional shares. And under U.S. GAAP, we are required to reevaluate the potential value of that arrangement on a quarterly basis. With respect to cash, we ended the quarter with approximately $148.3 million of cash and cash equivalents. This would imply a cash burn of $31 million in the quarter, down from $35 million cash burn in the first quarter. However, if you account for a couple of large receivables totaling approximately $3.3 million from two customers who were not biotechs or small pharma, which were due the last week of June and came in the first week of July, as well as a number of one-time items, including the payout of accrued vacation hours as we switched to a flexible time-off policy. Our normalized quarterly cash burn would have been approximately $24 million in the second quarter.
RMSD, root mean square deviation.
As a result of the longer booking conversion timelines associated with the larger opportunities we are seeing in our pipeline,
Okay, more errors, looks
our
like.
full year 2022 projected revenues.
Radius of gyration, I know all about that.
$86 million, representing a 28% to 44% year-over-year growth. We expect third quarter gross margin to be similar to our second quarter performance, with additional gross margin expansion in the fourth quarter, close to 40%. We continue to expect adjusted EBITDA for the full year 2022 to be between negative $65 million to negative $69 million. Looking beyond 2022, as David noted, we expect to be both
Cool.
quarterly EBITDA
That was fun.
breakeven and cash neutral by the end of 2024. And based on our current operating plan, we expect to be able to reach cash flow positivity with our existing cash on hand. As of June 30th, 2022, we had approximately 116.3 million shares outstanding. Since we currently anticipate having an adjusted net loss in the upcoming quarter and year, any converted options would be deemed anti-dilutive, and therefore, on a GAAP basis, we expect the basic and diluted share counts to be the same. In summary, we remain optimistic about our continued growth trajectory with a qualified sales pipeline at a record level and larger $10 million plus opportunities representing nearly half of that pipeline, which is up nearly 400% year over year. We remain committed to delivering long-term profitability and are pleased with our recent strides in that direction, particularly in regards to sequential gross margin expansion, SG&A reduction, and reduced cash burn. At this point, I would like to turn back the call over to David for closing comments.
Thank you, Mike. We're very pleased with both the continued strong execution by our team and progress achieved in our strategic priorities as we continue to pioneer decentralizing the clinical trial industry. We remain focused on building on this positive momentum with a keen eye toward our objective of long-term profitability and maximizing value for our shareholders. With that, we'll now turn it over to the operator to open it up for questions.
Thank you. As a reminder, to ask a question, you will need to press star 11 on your telephone. Please limit yourself to one question and one follow-up. Please stand by. We compile the Q&A roster. Our first question comes from Charles Riley with Cameron. You may proceed.
Yeah, thanks for taking the question, guys. David and Mike, I just wanted to talk a little bit about, the shift in, really focusing on, larger deals. Obviously, that's a good sign, longer term. Can you talk a little bit about, why the shift now and, about sort of resources internally to be able to go both after larger deals and continue to go after smaller deals at the same time. I just want to ask about that, and then secondly, the timelines. What would you expect? Because I would imagine over time, as greater than $10 million deals become more of the norm for you, and you start converting. What is your expectations for how long the sales cycle will be relative
Bag
to
holders.
what you've seen historically?
Yeah, so thanks for the question, Charles. Thanks for joining us today, too. Regarding the larger deals, it's really always been what we've been pushing for as a company is to continue to be to provide more utility to sponsors, continue to gain a larger trials and more pivotal trials, and that's exactly what's happening as a result. So I think that's really a good reflection of the positivity of the model in terms of what we've been able to achieve for our customers. And I think the acceptance of DCT in general. So I think that it's a sign in terms of the pipeline build and what we think about for the future. In terms of timelines for the closing these trials, I think it's a little bit
Nice.
to be determined. So it's definitely longer. We have some of the smaller deals can close like in 30 days, but the larger deals can be 120 or even more. And so many of these larger opportunities we're talking about, we've been working through all the details on them for quite some time. As you might expect, when you're talking about a larger opportunity or a more pivotal trial, there's more people who are involved in the decision-making process because of the criticality of the trial itself. And so I think we're seeing that as a reflection.
If I can add one more thing, in terms of those larger opportunities, we're really encouraged by the fact that a number of those larger opportunities are coming from existing customers. And so it's customers that we've demonstrated our ability to deliver for in the past. They're coming back for more and larger opportunities. And that's supplemented by some new customers as well in that cohort, $10 million plus opportunities.
Appreciate that. Just to follow up on that, would you expect over time, is part of the extended timeline for these deals in part because this is still relatively novel for some of these companies, particularly for as you get these bigger trials? Would you expect these timelines to perhaps shorten in the future as clients become more comfortable and confident in the model?
I think it's a little bit too early to tell. I think that we hope to see that, but I think that time will tell a little bit more on that. I think as we get more on the repeat buyers as well, I think that you expect to get some of those transactions becoming much more quickly as well. So over time, I think it's expected, but time will tell a little bit.
Great. And then, Mike, just one follow-up on cash. The $24 million sort of, if we adjust for some items, is that what you'd expect for a third? Like, is that a good run rate for the rest of the year?
I think our expectation is that we will see sequential improvements in that cash burn as we move through the rest of the year.
Great. Thanks a lot. I appreciate it.
Thanks, Rob.
Thank you. One moment for questions. Our next question comes from Justin Lin with William Blair. You may proceed.
Hi, good morning. I guess a question on guidance. What's driving the $10 million reduction in your revenue guidance estimate at this point? Does that have something to do with certain legacy projects being pulled forward or canceled, which might help explain the implied sort of higher implied margins within a changed EBITDA guide, or is that truly just a matter of better cost control?
You talking about the revenue guidance?
Right.
No, idiot.
The I think if you take a look at our backlog, I think it's very strong. But what we want to do is to de-risk the variability a little bit on our guidance that we're providing.
Yeah, and just to add to that, I think in terms of the guidance that we're providing now, as David said, on the de-risk side, we have substantially all of the low end in backlog as of the end of the second quarter.
Okay, that's helpful. I guess just a follow-up question on bookings. Obviously talked about these larger opportunities. Any notable shift, one way or another towards a certain offering? I'm referring to sort of Tech Plus, Metasite, DCT here. Any color you can give regarding how these are trending would be helpful.
Yeah, well, I mean, as I had noted, we're super excited about the new technology platform and the rapid pipeline expansion as a result of that. So I think that, that's one area. I think the other area is on the heels of the announcement for our Metasite Light and Metasite Rescue solutions, and I think we've got a lot of strong growth in the Metasite area as well. DCT continues to grow as well, but I think that it's probably safe to say that Tech and Metasite are growing a little bit faster than DCT, full DCT only.
Got it. Thank you very much.
And no problem. Thanks for the question.
Thanks, Justin.
Thank you. One moment for questions. Our next question comes from Matt Hewitt with Craig-Hallum. You may proceed.
Good morning, and thanks for taking the questions. Maybe one follow-up on the sales strategy shift. As you look at the opportunity today, is it something that was kind of a market-driven shift where you were seeing some changes in the market, and that's what prompted you to make the change now? Or was it a function of kind of as you're talking to your existing customers and seeing what's in their pipelines, it just became apparent that you needed to kind of put yourself in a position to win those awards?
Yeah, I think that the shift happened a while ago. I mean, we've been very intentional about our desire.
Oh yeah, I love lowering guidance.
Larger.
Really intentional about it.
To be a more critical part of the trials that our sponsors are running. And
Right.
so, our focus has really been on expanding our utility. I think it's a natural progression for us from being sometimes more of a quick fix or a proof of concept.
Our natural progression to lower revenue.
A mature clinical research organization that has the ability to deliver a lot more on behalf of our customers.
Okay, and then maybe shifting gears, you've got partnerships with some pretty big CROs like PPD. What are you seeing in terms of business coming from those relationships?
Yeah,
Ain't doing shit.
I think we've been public with PPD and Tinios and World Clinical Trials.
They gotta be real. They gotta keep it real with these guys.
I think that they offer a nice opportunity.
See, that's how I'd answer that question.
For us, I think that.
Let me rewind.
Maybe even more importantly, I think that we offer a lot of utility to them in terms of having the ability to extend their offering to think outside of just the traditional site-based network to add on. Yeah, the partnerships with the research organization that has the ability to deliver a lot more on behalf of our customers.
Okay, and then maybe shifting gears, you've got partnerships with some pretty big CROs like PPD. What are you seeing in terms of business coming from those relationships?
I mean, for real, they ain't doing shit for us.
Yeah.
I mean, we just lowered guidance. I mean, what do you think's happening? What have we seen from our partners? Man, they don't give a fuck about us. Man, fuck them. That's the right answer. Let's see how he answers.
The partnerships with, I think we've been public with PPD and Tinios and World Clinical Trials and CIMIC. And, I think that they offer a nice opportunity in terms of additional pipeline for us. I think that, maybe even more importantly, I think that we offer a lot of utility to them in terms of having the ability to extend their.
You're talking about helping them.
To think outside of just the traditional site-based network.
What about me right now?
Virtual site to their portfolio, in addition to a tech-only solution that they might be able to use as well in order to be able to execute some of the point solutions that they're trying to deliver in the marketplace. So,
some new friends.
Great, thank you.
They're doing shit for us.
Thank you, Matt. Really appreciate the question.
Look at our results. Look at our stocks in the toilet. Come on,
As a
man.
reminder, to ask a question, you will need to press *11 on your telephone.
Operator, you sound like a bitch.
Our next question comes from Frank Tekkanen with Lake Street. You may proceed.
Hey, thanks for taking my questions. Wanted to just try one more on the guidance and make sure I understand.
Make sure I understand you.
This is going to play in a midpoint guidance. It came down about $10 million. Seemed like this quarter was in line. Obviously, there's a large backlog. I think over $180 million right now. Just trying to triangulate really what drove
The fuck happened?
down for the second.
What the fuck happened? That's my question.
Commentary is more likely to be impactful to 2023. But
Yeah.
obviously
The fuck happened, bro?
2022 guide come down. So just trying to triangulate exactly what's going on with the guidance revision.
I'll start if you want to add on, but we came in. Bookings are a little bit disappointing for the quarter at $25 million. Right?
Yeah.
So
Pretty disappointing.
you couple that with the pipeline
Dumbass.
that we currently have with the larger $10 million plus opportunities sitting there, and the length of those decisions that are coming in. What we wanted to do is to issue guidance that has a low end that we have a ton of confidence in. Try to de-risk for everybody a little bit, and I think it's a safe range for us to play in as a result.
Yeah, I would echo that. I would say that from an encouraging standpoint, still see very strong demand for the offerings that we provide, as evidenced by the record level of pipe, the larger opportunities. But yeah, absolutely, second quarter bookings impacted some of that conversion to revenue in the second half of this year. And then to David's point, some of these longer decision-making timelines that impact the ability to convert revenue here in the second half of the year as well.
Okay, that's really helpful. And then maybe on bookings more specifically, can you just kind of share your thoughts around the lumpiness factor? Obviously, we got the wrong end of the sword this time, but I have a sense with some of these larger contracts, you could have bookings, significant bookings outperformance as well on some of these bigger.
Yeah, these bigger contracts, they're coming. Don't worry.
Just kind of walk through both sides.
Oh
of
yeah,
the
they're
bookings
coming.
factor with some of these bigger customers.
I think that's just it too.
I got a secret for you. There are no bigger customers.
Opportunities in the pipeline, you'll close more and deliver higher overall bookings. And so that's exactly the thesis. Frank hit right on it. And so we're going to continue to go down this pathway. And I think over the long term, not only do we provide greater utility to our sponsor customers, but we also deliver more in terms of bookings and ultimately shareholder value.
Okay, and then maybe just one last one. Mike, you touched on gross margins trending towards the 40% level for the last quarter of this year. Is that a reasonable run rate, thinking about gross margins on a go-forward basis, or should we expect that to jump around with different seasonality factors, et cetera?
Yeah, as I said in the prepared remarks, we would expect third quarter adjusted gross margin to be roughly in line with the second quarter, then with the expansion into the fourth quarter to approximately nearly the 40% level. On a go-forward basis, I don't think we're issuing official guidance, but we have made changes to our pricing strategy at the end of 2020, and then we update that again at the beginning of this year.
Made changes to our pricing strategy. We jacked that shit up.
As we see the projects go out the door, we are having high level fidelity to our minimum margin thresholds of what goes out the door.
Yeah, so I think, building on that, the aim here is for us to continue on that upward trajectory from a gross margin perspective. Correct.
Got it. Okay, that's helpful. I'll stop there. Thanks for taking my questions.
Thanks, Frank. Thanks so much for joining. Thanks for the question.
Thank you. And I'm not showing any further questions at this time. I would now like to turn the call back over to David.
Mnie PM. Ska?
I just like to say thanks everybody for participating and look forward
Ska?
to
Skabor?
future conversations. Have a great day.
A je hajvan. A je budol.
Thank you. This concludes today's conference call. Thank you for participating. disconnect.
Aye budol. Aye hayvan. We jacked that shit up. The fuck you think we did? One day you're screaming you love me now, the next day you're so cold. One day you're here, one day you're there. It's so unfair. Spill to the carbon over. Bessa. I give you my Bessa, that's all you need. Okay? That's the trust. That's my word. Bessa. That's the Albanian word of the day. You got my Bessa, that's it. I will never go back on my Bessa. Ivan Budal. One day screaming you love me now, next day you're so cold. One day here, one day my voice is cracked. Seven cards. Word is bond. That's what Bessa means. Correct. Correct. DJ Khaled. I have Bloomberg, I just have to install it. Just have a fucking, what the fuck is it called? I had to restart my computer because of all the hacks. Employer and individual, global, Medicare and retirement, community and state. One day screaming you love me now, the next day you're so cold. One day you're here, one day you're there. So unfair. Let's go to the cup, run it up. Holy Grail. Gary V. I don't really know much about Gary V. I know he shills a lot. Shills a lot. Does he think he's an artist or something? Is that the idea with his drawings? It's cool, man. What are you, Picasso now? You Picasso or you a businessman, man? Come on, man. Come on, man. Yo, bro, are you autistic, bro? Not a student of medical science, I would assume. If you knew things about science, you'd be dangerous. Thankfully, you can't comprehend it. Now get out of my chat room. Go. Now. One day love me down, next day you're so cold. Gary V. Vaynerchuk. Kupe poloi. Kuke poloi. Siebor. I was just explaining to people what Besa is. I look at every stock. That's how I find the stocks to research. That's what the notebooks come in. They're like your notes. Once you set up the notes, you don't have to do a lot more work each time. You just update every quarter. Do I speak Russian? Как дела? Хорошо. Извините. Нет. Давай. Kuche. Kuke. Kuke. I know how to say that. Kuche. Kuke. Kuke poloi. Cha. Kuche poloi. Cha. Kuche. Cha. Cha. Kuke. Ke. Kuke. I need to drink more water. I hope my cat's drinking water. That's what I worry about. Cats need their water every day. My mom does speak a little Russian. Both my parents. A couple words here and there. We grew up in Brooklyn. The Russians have taken over. Yeah, Merck, KGaA, German Merck. It's a different business from pharma, right? They have quite a bit of life sciences. It's a really well-run company. The family that owns it is so rich too. Kukenonin. Albanians and Russians, yeah, we get along. It's not that bad. Albanians kind of keep to themselves in many ways. The Life of Pablo. I wish fucking Kanye sold that to me. Are you crazy? Thing is, like, albums are now like loss leaders for these rappers. It's like they build a brand off the music. The music doesn't make them any money. It's amazing. I have to go to the pharmacy at some point. I have to not forget to. No, I just have to get my normal prescriptions. My normal prescription. Let's see.